Hello, this is DrPaulCottrell, and I want to do a market update. We're going to be playing the news. This is recorded on August 5th, right before the New York Open. Last night in Japan, there was a major sell-off, and it looks like there were a lot of margin calls that were made, and accelerated pressure to sell. It has translated into this movement has progressed into the futures market in the United States. So right now, the futures market for the S&P 500 is down 200 points, and the Dow is down over 1,000 points. What is concerning to me is the VIX index. For the ones that don't know, the VIX index is a volatility index that basically shows kind of stress in the S&P 500 market, okay? It is now, the VIX is now at, the last I looked, it was 64. It's now at 55. It's at 55, so it's bouncing between the 50s and the 60 range. We haven't had that kind of level of volatility increase since the COVID crisis in 2020. The next worst crisis that we had in recent memory was Lehman. And Lehman was in about 89 VIX. COVID was in the, I think it was the 70s. Let me check. COVID was 85. 85 peaked, and then COVID peaked at 85, Lehman peaked at 89, almost 90. And we saw today in the futures market, 64, maybe a little bit higher than that. Right now, as I'm recording, it's at 55. The point here is that this is a very elevated volatility. That means that there's super stress in the market and that there's going to be contagion. Contagion with sell-off of equity markets around the world, contagion of currency fluctuations and all this stuff. Just to give a little bit of a background, the BOJ announced raising rates, all right? And before that took place, there was a steady increase of a steady weakening of the currency before the BOJ announcement, all right? And it peaked, this trade, the currency trade between the Japanese yen and the US. Now, the Japanese yen obviously trades with other currencies, but let's just focus on the US currency. The weakening of the yen relative to the USD has been happening over many, many, many months. The BOJ acts and starts to raise rates. In July, on July 3rd, it peaked at about 160 for that currency pair. So 160 yen to $1, all right? What that basically means is the yen is much, much weaker than, let's say, trend, all right? The BOJ, for multitude of reasons, because they've been in zero bound and they've been now raising rates. Well, by raising rates, it also strengthens the currency, all right? And there's been, since July 3rd, there's been a major appreciation of the currency. It is now at 142 yen to the dollar. So that is a major stress indicator, all right? For the ones that have been watching me for years, I've always said that there are different indicators to look at for big moves, stress moves in the market. If the yen starts to strengthen quickly, looking at the VIX and looking at fluctuations in oil, okay? That's kind of what I look at, All right. There's other people that look at different things like yield curve, differentials, and all this stuff. But that's what I look at. All right. And the VIX is very high. It's at 55 at this recording. The yen has strengthened from its weak point of 160 down to 142. So the lower the number, the more strength it is, the stronger it is. Markets sold off in Asia, huge. All right. And our futures for the next following trading cycle in the United States looks really bad. All right. VIX is high. Oil is suppressed. Oil seems to be trading at about 72.70. I've seen it as low as a little bit in the lower range of 72. So there's a little bit, but there's fluctuation. So oil is suppressed. Oil was trading at 77 not too long ago, and at 78 not too long ago, in the 80s not too long ago. So oil has come down, VIX has gone up, the yen is increasing. All right, strengthening. Those are all signs of some sort of problem. Now, I did say, and I still hold this contention, based on the Fibonacci sequence, the two Fibonacci sequences of the crash in 2020 and the beginning of the bear market, the smaller Fib sequence to the high point. There's major support level at 500 for SPY. Right now in the futures market, it's trading around. The last I looked, it was like 513, something like that. Okay, 500 is a support level. If it breaks the 500, breaks that support level and keeps on going down, the next major support level is 483, 482, somewhere in there. Both of those points, if triggered, are buy points to put cash into the market. That's what I'm doing. All right. I have cash on hand, waiting for an event like this. This is much more rapid than I thought it would happen. And a lot of people think the same way as I do. It's happening much more rapidly. So if the 500 is triggered, I'm going to deploy some of the side cash that I've been waiting on. And if it breaks, then the remainder of the cash that I set aside, if the 483 or 482 is triggered, right? If I see 485, I might still buy, right? But around there, the 485, 482 range, okay, for SPY. The chances of it breaking that, assuming there's no bank failure, and the market keeps on going down, is low. I still hold that we may actually close the year out at 5,500, maybe even 6,000. But the 6,000, because of the veracity of this sell-off, I think is much lower probability than I said about a week ago. So my target for year end on S&P 500 is still 5,800. Might even be low probability, but it may get as much as 6,000. The caveat is this: assuming no bank failure. If there's a bank failure, then we're not going to see the 5,500 on the S&P 500. And what we're going to do is we're going to start seeing that kind of like almost like a market correction, perhaps even breaking the support level that I said on the S&P 500 at 4,800, or SPY if you buy the ETF at 482 or so. It might break that. And then the next support level would be, if that happens, if there's a bank failure, which I don't think that there will be, but if that did happen, The next support level The next big support level would be the 50% retracement at 557 and 430. So if bank failure, 557, I'm sorry, 457 for SPY, 457 or 430. Okay, the 430 mark is much more of a support level than the 557, the 457 on the SPY. Okay, so it's really dependent on if the bank, how much stress are in the banks. This volatility spike was pretty high. I'm kind of surprised at that. But I'm still, at this moment in time, based on the data that we have at this moment, I still think that 500 is a major support level, and 482, 483 for SPY, and that year-end target still at 580 on SPY, or if you're looking at an SP 500 index, it would be 5,800. Okay, that is my look at this. But today is going to be a bloodbath. So if you have been listening to me, don't buy yet. Wait until it hits that 500. All right. If it doesn't hit the 500, then this is kind of like almost a head fake. But the VIX is pretty high, so it's probably going to be it probably will break the 500. But don't buy yet. Wait, be patient. And if it doesn't trigger, then just keep on, holding the positions that you have put in the market, if you've been following my advice. Now, the market has opened up. So let's listen to Kramer. I think
over his head. Because I think you've got Dell, Lenovo, Ph.D. trying to figure out if you need to set the source. You have Lisa Sue so ready.
You're on a time delay.
He missed in remember 2009. He was let go by Intel because he was doing graphics. So I just think that there's a little history here. Two, Intel stole the get ready. There'll be a lot of red on that real-time exchange back at our headquarters.
Look at all that red. Those are for the S&P 500.
All right, Jim, given what you said previously, and certainly does not seem to be
okay, what I'm going to do is I'm going to go to Bloomberg. I prefer their feed.
Big drops in the cash trade. It looks like even worse than futures. Get over to Katie Brightfield right now to see where we're moving. Katie?
Yeah, I'm excited to tell you about it because there's a lot of action to walk through right now. The S&P 500 down more than 4% just in the first few seconds of the trade. Even worse, if you take a look at the NASDAQ 100, your big tech names really bearing the brunt of this selling right now. Of course, a sell-off that started in Asia with Japanese equities continuing right now at the U.S. Open, and the small caps too, really taking a bath here. The Russell 2000 down by more than 4%, nearing 5%. But one stock to watch at the open is Tyson, one of the few stocks in the green right now. That's after it posted an earnings beat as a rebound in chicken profits helped to offset a downturn in its beef business. You can see shares currently up 2.4%, Shanali.
Speaking of chicken, there's some chicken going on in the crypto market here. You have Bitcoin dropping below $50,000, and so we're keeping an eye on those crypto-related stocks. Coinbase down 20.
This is the point I was saying about Bitcoin. It's not a it's a speculative virtual commodity, and it's not a holder of value. It's too much volatility. It will never ever be a transactional currency unless the stabilization of that volatility It's a trading commodity. That's all it is. It's like saying wheat should be currency or pork bellies.
Apple right now trading down about 8%. 8% is the drop in Apple 202. Nvidia also trading down big, wiping off probably 300 billion in market cap. Nvidia down 14% right now. Let's take a closer look at the big drop in the biggest tech stocks with Abigail Doolittle. Abby?
Yeah, Matt. Well, this sell-off that we're seeing in stocks, it's not entirely surprising. We've been looking at charts all year of the stock indexes, Bitcoin, and individual stocks, pointing to the idea that there could be some sort of a real sell-off. Apple, no exception. Warren Buffett's Berkshire Hathaway started selling last December. That was a big reason why the stock was in a bear market up until April. It really should never have gone back above 200. It's there now, but well off the highs, the worst day since March of 2020. Nvidia, also the worst day since March 2020. Too far, too fast, the AI craze. Ahead of the selling in Nvidia, the bear market that it's in, it had been up more than 180% on the year. Amazon
VIX
down
is at
7%.
53
Even
right
stocks like Palantir reporting after the bell, down 13%. With this, we're of course seeing the spike in the fear index, or more accurately, the uncertainty index. This is a 5-day chart, and I know that you were talking about this with Stuart Kaiser, but take a look at the VIX flatlining around a 15 handle, sort of a complacent level from a historic standpoint, all the way up to a 65 essentially, now coming off this, but nonetheless the highest level since March of 2020. And if we can connect this back to Apple, the Apple chart strongly suggests we have more selling ahead. This is a long-term range where Apple's basically going through, let's call it 170 up toward 200. Take a look at the drop right down into the range, the bottom of this range at 170, the RSI going down. It suggests Apple's going to sell off by another, let's call it 15% or so. As one of the biggest stocks, this could be brutal for stocks. The index is ahead.
Certainly off of peak panic for the morning, but a brutal morning nonetheless. Abigail Doolittle, we thank you for your analysis, and joining us now for more analysis, Victoria Fernandez, Chief Market Strategist at Crossmark. You look at this market, Victoria, there's very few places to hide. You really see the brunt of that bid in the bond market, but gold is down, Bitcoin is down, stocks across every major indexes are down for the most part. How do you position in this environment right now?
Well, what we're hoping is that a lot of people have done what we did with our clients over the past couple of months, when we were seeing some of the warning signs that we thought we would see a larger pullback in this market, and start doing that rotation out of the momentum trades, start trimming some of those tech names that you had such high positions in, getting some cash on the sidelines, and finding those areas in the market that we thought would do better in a downturn. So we were looking at some of the staples names, some of the healthcare names, utility names. You know, we liked financials, but we said wait for a pullback because financials had such a strong run. And we're starting to see those trades now start to do better on a relative basis. So do you go in today? I'm not sure. I think you take a little bit of a break today with what we're seeing in the market. Let things settle out a little bit, and then start looking at some of those names that we mentioned, some of those more defensive, more staple plays in your portfolio, and building those up while trimming some of your other ones.
And Victoria, I do want to talk about what's going on right now with.
It's all about the VIX, all right? And like I said, the VIX is showing major stress. That means that there's going to be some sort of contagion, some stress that's going to happen. And it may get fixed, and then all of a sudden it rears its head back in October. Well, so there might be two waves here: the signal and something that happens in October.
Look at earnings. Yeah, I know earnings are up 11% year over year, but if you look across the board, you're not getting as strong of a guidance as people were hoping to see. So guidance is not because inflation expectations were coming down, but because there were growth concerns coming down. You saw a lot of weakness in manufacturing and a lot of weakness in the labor market besides the payrolls number. You look at job openings, those were stagnating. You looked at quits, those were falling down. One of the most important recession indicators is really looking at the job differentials. Job plentiful minus jobs hard to get. It hit a cycle low. So there were a lot of elements churning under the surface that were telling us growth is going to be coming back. Jobs are not there, wages are not there, and that means trouble for the consumer. I think Friday, again, was a culmination of all of that. Add in the unwind of the carry trade that you were seeing as the Bank of Japan raised rates, and the expectation that we would be lowering rates in September after the Fed meeting. All of that coming together, I think the market came to realize, wait a minute, things maybe aren't as good as we thought. Maybe that soft landing is not a given. And that's why we're seeing the reactions we are. We also have geopolitical events going on that adds to the uncertainty.
Yeah, I was surprised actually that the market closed up on Wednesday after the assassination of a boss leader in Tehran by Israel. Nonetheless, it looks like the market has discounted that, Victoria, and is more worried about really the jobs picture, right? But is that recession indicator going to be on, as GDP was 2.8% in Q2? Atlanta Fed Mike McKee was just telling us is forecasting 2.5% GDP in Q3. That doesn't really feel recessionary at all. Why would the Fed come in with an emergency cut?
I'm not sure they will come in with an emergency cut. I know the market is talking about that. Are the expectations of a 50 basis point cut in September moving much higher? Yes, and that's probably more of a possibility than a cut before that meeting. Jackson Hole will obviously be an opportunity for the Fed to lay out its plans and give us a better clue as to what's going on. But I do think you're looking at, look at 2-year yields to Fed funds. It's minus 164, 165 basis points. Again, we only see those levels prior to recessionary periods, 2000, 2008, before the bank crisis in 23, and 98. We're seeing all that, and the labor market is telling you in a lot of different ways, like we were just talking about, with wages coming down, that the consumer is going to be at stake. We're hearing it on the earnings calls as well. Credit card delinquencies going up, auto delinquencies going up, travel coming down, restaurant spending coming down, big ticket items and luxury items spend coming down. So I think the market is starting to get a feel that, okay, we are slowing. The Fed did not loosen those restrictions at all. So we have a little bit more time where there's still a little bit of squeeze on the consumer. All of that is concerning the market right now. I think we'll see the Atlanta GDP number come down over the next couple of weeks.
And even at the top of this hour, we have, of course, that ISM services data coming out, and you have a market that is kind of on tender hooks here, isn't it, Victoria? If you think about kind of the forward catalyst, how long do you sit out this market for? You had mentioned a little earlier that this wouldn't necessarily be your time to dive right in. What would be that time?
Yeah, I was actually listening to some lists this morning, and they're saying in the short term, right, in the next couple of weeks, you could get a bounce from an oversold position. I mean, look at the levels that we're trading at right now. These are huge drops over the last 2 trading days. So you could get a short-term bounce. Maybe that's an opportunity to trend some names and get some cash available. But in the intermediate term, over the 3-month time cycle, it's showing that we will probably move down even further, which puts us kind of towards the end of October. We know September historically is a very tough month for the equity markets. So I think I would wait a little bit longer. You're not going all in a position at one time. You can dollar average a little bit on these days where there's pullbacks. I would just be cautious and kind of take your time over the next couple of months, because I don't think today is going to be our final down day.
All right.
Victoria, now we have a
thanks so
VIX in
much
the
for joining us,
50s or
Victoria
60s.
Fernandez of
Times change. Families.
Like I said, major support level at 500 for SPY and 482 for SPY. If it triggers that, then go into the market some more, assuming that you're in the market now. If you're not in the market, then you might want to assess what kind of risk exposure. If you're long term, it's actually good to get into the market now. If you're short term, then it may not be the best time to enter. Please go to my store, the-studio-reykjavik.com, and help support my work. Most of my videos are for free. You can donate through Stripe, PayPal, or buy me a coffee. You can also support my work by being a paid member to my Patreon channel. Link is in the description of this video. And you can help the community out by me doing videos for free so you can learn something. Literally, if you've been listening to how to manage this since, since the beginning of this new rally that happened, you did pretty well if you actually listened to what I told you to do. So now I'm navigating you through another tumultuous period. So these videos are for free, and that's through the donations and the help and the sharing of links and having your social network, you asking your social network to follow me. That way I can reach a larger audience, and I greatly appreciate that. I also have products on my store, the-studio-reykjavik.com. The link is in the description, where you can buy products like structural nano silver soaps. I have a variety of different soaps. These soaps will neutralize pathogens. It's a very high quality soap. This one happens to be charcoal tea tree. It's a very high quality soap. I have different varieties, so please go to the store and take a look at that. We're going to be going into the cold season soon in the United States, so it's really important to start stocking up on lozenges. I have elderberry lozenges in a 21 count. I have blueberry lozenges, or blueberry drops in a 100 count, and honey and lemon drops in a 100 count. This is really important. The moment you start feeling an irritation, either because of an allergy or because it's cold season or whatever, take a drop or a lozenge, and it'll create those secretions, it'll neutralize the pathogen, and it'll maintain that mucosal lining for your epithelium. That's really important, because if you have irritation in the epithelium, or your mucosal barrier is subpar, you're going to increase the chances of getting sick. This will help to support that. So this is a great way. The moment you start feeling some sort of irritation, you want to attack it right away, and you're reducing the chances of getting sick. So for the cold season, or even during the allergy season. So it's really important to have a couple bags in your home, so whenever something like that might arise, you're attacking it right away. So go to the store and get the lozenges and the drops. They're very high quality, they neutralize pathogens and protect the mucosal barrier. I also have structural nano silver liquids. I have Health Max 35 and Health Max 14 at different price points, and I also have the structural nano silver liquid that's in a 30 ppm. So the Max 14 is 14 ppms, Max 35 is 35 ppms, and this product here that I have in my hand is 30 ppms, all at different price points. What you basically do is you just take a teaspoon of liquid in these bottles, take a teaspoon of it, swish it in your mouth for about 20 seconds, gargle, swallow, and you do that every day. If you're not feeling well because of cold season, what you should do is take a teaspoon or two a day, all right? And do the same thing, gargle, swish it in your mouth, and it's going to improve your oral hygiene. It's going to actually reduce plaque. And in addition, it's neutralizing those pathogens and maintaining that mucosal lining. It's really important to do every day. I have these applicators on my store where you get the spritzer, the dropper, and the nasal spray. And it's a great way to just put liquid in these bottles and just put it in your bag. And that way, when you're at work, if you need to spray your throat, or put liquid in your throat because you're getting that feeling that something's not right, or a nasal spray, it's a great way to transport the liquid. So please go to the store and get the applicator set if you haven't already. Olive leaf extract is really important. Olive leaf extract is a new product that I have on my store, and it will help to boost up your immune system, and it will help with your cardiovascular system. How does it work? For the cardiovascular system, it's going to lower LDL and it's going to increase HDL. That's important because it's helping to control your lipid profile to reduce cardiovascular disease. For the immune system, it's bringing down inflammation, all right? Like I said, if you bring down inflammation, these pro-inflammatory cytokines, you're going to slow down the aging process, and you're going to be boosting up your immune system. So please take olive leaf extract every day. Go to my store, the-studio-reykjavik.com.
Buffett's not really known to be trying to play the market to try to sell at the top to the bottom. He talks about buying these stocks as buying businesses. I do think it probably shows a little bit of less confidence in his idea of the long-term prospects of Apple.
I mean, I did want to ask, what's he going to use this on? I mean, he's collecting, of course, the proceeds here. He's still in Apple, but he's cut his stake by nearly half. What's he going to do with all the money?
It's really tough to say, right?
Yeah.
I mean, if I knew that, I wouldn't be taking the Metro North to work, right?
At least you're not in a Jersey Transit.
Exactly.
Could be worse.
Could be worse. So he bought some Chubb stock in the, I believe it was in the second quarter, and it's one of their bigger positions now. That's an interesting story. Two insurance giants perhaps getting together. There's no real evidence of them buying more of it. But, I think it might be in something that we just don't know. And he's talked a lot about there's just nothing out there big enough for them to move the needle.
But Matt, don't you think, I mean, the fact that the Oracle of Omaha, this is the guy who knows, right? He's selling stocks now and building up a war chest of $280 billion in cash. Doesn't that seem exciting at a time when the market turns over?
It seems exciting. I wouldn't put it, though, as if he's selling everything, right? If you look into the numbers,
He may be positioning himself for October because maybe he has some information about some sort of bank issue that people don't know about. I don't know, but Apple may have, they have peaked. Apple, what products are they putting out on the market that's really going to be a wow? There's some rumor, about some sort of health ring that they're doing. Their Apple Watches have issues with patents. The virtual reality goggles no one wants. So I'm not so sure that there's going to be a big impetus for revenue increase for Apple.
On the day, financials taking a beating, down more than 3%. Real estate, energy, all down on the day. I want to take a look here also. Now the Nasdaq 100 looking at a downturn of about 3.5% on the day. Again, off session lows. A fun fact, there are some stocks in the green to be had here.
Yes.
Earlier today, you had SIBO, which is behind that VIX index, also launching a new VIX product later this year, actually hitting a record earlier today. So not everybody loses.
Well, Kellanova, right? The maker of Pop-Tarts rising.
Tyson's as well.
There you go. There's a few stocks that are gaining in this market. Here are the indexes. None of those are gaining right now. But they're off their session lows. Russell 2000.
Nespresso presents Summer that goes on and on.
You use all the curse words and stuff like that. But no, I mean, in the end, it does hurt their case.
Bitcoin was supposed to be
value.
Yeah, would we be safe in Bitcoin? Would have been the thought that perhaps
John Book.
That is not the case.
Well, it just turns out that gold. I had a Nico Eagle last week.
You had a who to what?
Nico Eagle is a big gold company.
Oh, okay.
Yeah, they're in Canada, which is actually not that dangerous place to mine.
Yes.
And what it comes out is that their stock has been a total winner, and they're very adamant that when things go bad, crypto will go bad, but that the gold won't, because we've only found about 1% more gold each year. There's just not a lot of gold to be found, and a lot of it's in high-cost places. So gold is maintaining its value. And I think that's great. I think everyone should have 10% of their assets in gold if they can get it. And try getting that out of Costco. It's like really hard.
Yeah, I bet it is. I should point out, we bought it while still down sharply. It is well off the lows, even though
they'll come back and sell their team. These are scalpers. Wait till 10:45. They'll sell their stock down. That's what they do. They're not bozos. They just make a little money. And then you come in between 10:45 and 11 when the European market's closed, and you get a good, maybe a little schnitzel.
Cut its losses to below 3%. Nasdaq also now below 4% loss.
Well, this is cool.
Again, at the very open, we were down much more sharply.
Doesn't that tell
Not to
you
say that those aren't significant losses, particularly given the performance last week. I mean,
that's the future. Now, let's take your Kellanova story, which was a favorite report that I interrupted. What that says is maybe we have to rethink the negativity. Like Mondelez had a good quarter, but nobody cared because GOP-1. GOP-1 is like a phantom boxer. It doesn't look like a butterfly.
Yeah, then you have.
Here's my class day speaker.
By the way, Jeff, the one name I have up on my screen is J&J.
Well, that's
It's
again,
not on much, but it is up.
that's safety. The Brothers Johnson has always been a safe place to go.
Yes.
Even during the period of town.
Yes. Brothers Johnson. But that makes me think of Woody. No, but that makes me think of New York Jets.
Clear how much more pain there is to come. And joining us now is Liz McCormick, Bloomberg's chief correspondent for global macro markets, and explain what is happening here with this carry trade that has existed. Because you can say that this is really somewhat of a generational shift as we watch this divergence, but unclear how much it has meant for this trade to unwind. Explain the trade.
Yeah, well, let's remember the trade is forever. Rates were so low in Japan, for example, and it would make sense to borrow in that currency. So in a sense, short the yen and invest where rates are higher, the US, Mexico, etc. Now, the key to the carry trade, carry is like you sit there and make carry, interest rate differentials. But the key that it really works to is that volatility is low. Because if the currencies move against you, you could lose a lot of the currencies. And
That's what's
not
happening
only
here.
like you explained,
There was a
the yields have
gigantic
started
move in
to
the
kind of go
currency.
the other way. Bank of Japan raise just a little bit. They started. And like we can see, and you've been talking about how much people are pricing in, the Fed's behind the curve. We're going to have these massive over 5 cuts this year. So that rate differential got turned on its head somewhat. And volatility. People are like heading to the hills. Like they're talking in all these asset classes. When you see this route begin, it just escalates other things. So people are like, this carry trade would see.
The Nikkei index last night went down over 12%. That's a big move. Now, other indexes were around 3%, close to 4%, some were 2%. So definitely a problem in Japan. Now, the question is, will that be a contagion around the world? Because right now, you have banks that are talking to their interbank lending and going, well, I'll buy at a certain rate, for the next, day or two, or the next 30 days or whatever. And they may be able to get enough funding within their own banking system without having to go to the Federal Reserve. Another important feature is how many are going to the window at the Federal Reserve for help because of stress. Probably not yet. This is why I'm saying that this might actually also, we might also see a signal in October. There's stress in the banking market. They stabilize it, today, tomorrow, right? Maybe even Wednesday, things start to calm down because volatility is always heteroscedastic, which basically means it spikes and then comes back down. But usually when you have that big spike, there's another, lesser spike, but significant, popping up in about 2.5 months. Well, we're in August. So August, September, October, see? So the real crisis isn't right now. The real crisis is if it emerges in October.
And then everybody's out and they call the death of it and they come back because that's just human nature. And it is a good strategy, of course, when it works. So it just, I've just seen it so many times, it's a circle of life. Circle of
Well, I
life.
think what people have to understand is it's a form of embedded leverage in the market, and no one knows how far that leverage goes.
Yes, it's embedded leverage.
Embedded.
What does
It's
that
in
mean?
there.
Okay, I get it.
Under the surface.
Got it. All right. Liz, thanks very much. Liz McCormick, they're talking to us about the unwinding of the carry trade. Let's get to your trading diary right now. What you need to be watching this week. Tomorrow, we get earnings from Caterpillar, Uber, and Airbnb. More earnings from Disney, Novo Nordisk, and SoftBank on Wednesday. On Thursday, we get earnings from pharma giant Eli Lilly, which is going to be fun because we get to talk about, what do you call those things again?
GLP-1.
GLP-1s, which I still need to get hold. I ate so many chocolate-filled
So many vegetables.
croissants when I was in Spain. All right, Alibaba rounds out next week. If you're watching Chinese companies with their...
Please go to my store, the-studio-reykjavik.com, and get the structural nano silver gels that I have. I have 2 versions of this gel. I'll find it. And I have it in a dispenser, and I also have it in a tube form, right? They're very high quality products and they're dual purpose. Basically, you can neutralize pathogens by putting the gel on your hands. It stays active for 5 hours. You can also put it around your mouth, around your nose, lightly coat your nostrils. around your eyes, around your ears, and it will help to neutralize pathogens. It also can be used as a skincare product. You can put it on your skin. Let's say put it on at night and then exfoliate in the morning, and you'll notice that your skin is clearer and tighter, especially on your face. In addition, it'll help to heal some acne, and it'll help to speed the healing of a cut, an abrasion, a minor burn. So this is a dual purpose product. I have it in a dispenser form and a tube form. So please go to my store, the-studio-reykjavik.com, and get the structural nano silver gels. Probiotics are really important, all right? And I have a powdered version and a capsule version of this, all right? So please go to the store, the-studio-reykjavik.com. Why is taking a probiotic so important? One, many people are eating not correctly. So they're not getting enough fruits and vegetables. They have maybe too high of a meat consumption, whatever. They're eating too much processed foods, too many sugary foods, and that causes disruption in your gut biome. So what you want to do is first, filter your water. Second, stop eating processed foods, stop eating fast foods, and eat a balanced meal. All right, that means some carbs, some protein, some lipids. All right, so just balanced diet. Restrict your calories a little bit. It will help to lose weight, and also it helps to activate certain genes for metabolism too. And what you'll notice is if you restrict your calories a little bit, for many months, you'll notice that not just are you losing weight, but you actually have more energy and you're actually aging slower. And it helps with your immune system. But so you want to control your diet, right? And then take a probiotic. This probiotic will start to reset that gut biome. And that gut biome will then be able to absorb the good nutrients into your system. And then you'll have a better metabolism and that communication between your gut and your liver. Your liver does a lot of stuff for metabolism, right? And it also, a good gut biome helps with mental clarity and mood. So people are less depressed and people can focus. It's not by accident where, you have a poor diet and people are depressed and they're sluggish and their metabolism is terrible. In addition, when their gut is really bad, they'll have inflammation in the gut. And so you'll have that inflammation will increase the pro-inflammatory cytokines and weaken your immune system because your body is constantly in a chronic phase. So to stop that chronic phase in the gut, you need a good probiotic. So I have it in a powdered form. You just take a scooper and mix it with your food or water, or you can take the veggie cap, which is the one that I have in my hand. I typically take the powdered form because I just mix it with my hummus. Other people prefer just taking the capsules. So it's up to you, but the key is get a good probiotic from my store, the-studio-reykjavik.com, reset your gut biome, and you're going to improve your health. And then continually do that. So the ones that have been following my advice and they're taking a probiotic and they're, keep on doing it because there's going to be compound benefits with the metabolism and, reducing that inflammation in the gut. So please go to the store, the-studio-reykjavik.com. Follow my lead and you're going to be healthier. And, since we were talking about inflammation, it's a pillar for slowing down the aging process and boosting up your immune system. Turmeric is an antioxidant, but it also brings down inflammation. So you should be taking turmeric every day. If you're sick or you're not feeling well and you're kind of like you feel you're inflamed, right? Take a double dose of it, all right? Turmeric is very powerful and very important as a daily supplement. And ashwagandha root will help to control your blood glucose levels and reduce that inflammatory response in your cardiovascular system. So these are synergistic. It's going to bring down that inflammation. It's going to control your blood glucose levels, and you're going to start noticing a slowing of an aging effect on your body. You know, that if you don't control your glucose levels, you age faster. You don't control your glucose levels, you start to get inflamed. You age faster. Your immune system goes down. So if you take my advice, the things that I'm telling you to do and stack and how to stack this, they're synergistic. So by doing this, that you're going to actually start seeing that, wow, Paul is right. You know, there is, you know, you can see these effects almost within days. On some products, you see it in minutes. You know, for example, the Even Better bar in terms of muscle pain. But you know, many of these products you're going to start feeling within a few days or even a week. Other products you may not feel the effects until a month or two. But it's important to take because they work. And lastly here, vitamin D3 is really important for absorbing calcium. It helps with getting rid of cells that need to go through apoptosis, especially if they're infected. And D3 is important as a gene expression cofactor. So take vitamin D3 every day. It's very important.
The NASDAQ down close to 14%, and the Dow down only 6% from its July high. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Jess, Paul.
Okay, so as of right now, it's at 10 o'clock New York time. The VIX now has dropped down to 39. So what's probably happening is you have algorithmic trades coming in, buying into the market. Okay, but trust me on this. There's going to be a little bit of volatility the next couple of days or so, and it definitely a potential signal, another negative signal that happens in the VIX in October.
A couple hours. Again, John was just reporting this ISM data. He did better than expected. Let's go right to that because we can use some good news here. Steve Miller, chair of ISM Services PMI. It seems, Steve, some pretty solid results. What do you take away from some of this ISM data?
Yeah, we were certainly happy to see it return to expansion territory. You know, it seems like things are moderating in terms of feedback that we're getting through the survey. We saw from a GDP standpoint, kind of almost dead even, those that were in expansion versus those that were in contraction, with just a slight percent, about 3% higher on the expansion side. As you see in the number, it's just slightly above in the expansion range. So happy to see it's less volatile than we've seen in the past. With last month, it was about 10% higher GDP represented in the contraction territory versus expansion.
And when you're looking at the Atlanta Fed's GDP Now model, obviously we know that's volatile, but still the next update's going to come later this week, but it's around 2.5% for the third quarter. So I know there's a lot of concern when we had some of the manufacturing data last Thursday, obviously the jobs report on Friday, but when you still have economic growth forecasted to be pretty solid here, how do you sort of unpack some of the latest wave of data here and how this latest, when you're looking at ISM, sort of fits into this?
Yeah, so on average, for 2024, what we're seeing is gradual expansion. The latest reading is about, I believe it's 0.8%, represents about a 0.8% increase in GDP growth. So I wouldn't be surprised to see that kind of a growth number, but certainly what we see in our survey data on average is continued growth in GDP.
All right, Steve, thank you so much for joining us. Really appreciate you coming on and breaking down some of these numbers for us. Steve Miller, chair of the ISM Services PMI. Again, some better than expected services PMI. 51.4 was the actual reading. Consensus was 51. Last period was 48.8, so a nice improvement there. Jess, you've got some trading market news.
That's right. So users are reporting issues with certain trading platforms. So right now we have this running on the terminal right here. So you're looking at over 2,300 problems reported with Fidelity. That was around 9:52 a.m. Eastern here, and then
Probably
1,400
people are
problems with
selling.
TD Ameritrade. Also, some other ones that are seeing some pressure here, Vanguard, as well as Charles Schwab. So we'll keep you posted as the updates continue to come through on this.
And yeah, not a
People
good day.
are
I'm just looking at
bailing
the
out of their
WTI
mutual
functions.
funds.
Shows you where the market's going. Also shows you the volume. I mean, the Dow Jones volume is 80% above the 30-day average for this point of the day. The S&P is 21% higher. So you don't want to have those types of trading.
So to
platforms.
prove,
You can get
to prove my
big
point,
moving
I was
days.
saying about 500 being a major support level for S&P 5 for SPY, or 5,000 if you're looking at just the index, the S&P 500 index. It's the S&P 500 index is now trading at 5,195. It was at 5,114. All right. 500 for SPY or 5,000 for the S&P 500 is extremely supportive. All right. But if it breaks because of some stress in the banking industry, all right, if it breaks 483, 482 for SPY or 4,820 are major support levels. And then again, there's another major support level at the 450 mark, 457 actually, and the 430 mark based on the fib sequence. So this thing's not like going to go like to zero. It's not even going to go half, right? There are serious support levels that if you have a little bit of cash on hand, you start putting it into the market if they trigger those support levels. All right. And like I said, I have some cash on hand waiting for this something like this to happen. This is a much more vicious cycle than I expected, but this is because of what's happening in Japan. And if 500 gets triggered, deploy more cash. If 483 is triggered, deploy more cash. If 450 is triggered, deploy more cash. All right. Don't be fearful of this. This is how you make money. The ones that are jumping out of the boat right now and selling their funds and their mutual funds and their ETFs and everything from Fidelity or Charles Schwab or whatever account that they have, for their 401k, wrong move. When the market was getting a little heated, you should have put about 12% in cash. And a lot of people, they go, no, I'm missing out. Well, now you can position yourself much better. If you just listen to what I've been saying for over 4 years, right? But just recently, if you've been listening, you don't have to pay attention to the market every day unless you're very active kind of trader. But most people aren't active traders. Most people are investors. And all you got to do is just pay attention, watch the videos I do about updates on the S&P 500 and where the new targets are, and just trade accordingly or invest accordingly, and you'll do all right. Don't be fearful. Don't fear this. Actually, I kind of want the market to go down more so I can buy at a better rate. But what's happening here is that it looks like the banks internally are loaning to each other to stabilize things. So that's a good sign. And you have the algorithmic traders that are saying, well, wait, this is oversold, so I'm going to buy it. So the algorithms are buying. So the question is, will this carry out into Wednesday to Friday? And what, after the dust is clear, what's going on with, potential contagion, especially in the banking industry. What's going on with the Federal Reserve? Are they going to lower rates? This is a big push to lower rates. Will they push the rates lower? I don't know, but all these data points are going to be discussed and and pondered upon throughout the week and weeks into October. There's another signal that I suspect coming in October, right? So if you do have cash on hand, you probably don't want to fully deploy if your target is triggered to buy, because there might be another sell-off in October. But I think after that, then it's probably safe to deploy. But again, I don't want to get too far ahead of myself. I'm still targeting SPY at 580. I'm sorry, 580, or the S&P 500 at 5,800. End of year target. That's assuming nothing crazy happens in October. All right, but let's just see, But don't get too worried. Don't get too worried, because the algorithmic traders are coming in to buy. Now, the S&P 500 is now down 167, but it was over 200 when I'm starting this recording. So the algorithmic trading is coming in to buy in.
Don't not pick up the phone.
Right, did you start right before the 87 crash?
Yes, I did. I was on the floor at 87, October 19th. So anyway, Gina, thank you so much for joining us. Really, really appreciate it. Gina Martin Adams, she is our equity strategist for Bloomberg Intelligence. We really appreciate getting a few minutes of her time. Michael McKee joins us here, and he does all the economy stuff for Bloomberg Television. Mike, I left the studio Thursday. All my discussions were soft landing, some variation of soft landing. And then today,
to crash.
About a recession.
Well, it's only Gina's. It's only the equity market. You were talking about 1987. I made a reference this morning when I was on with to people opening the windows down on Wall Street, and I got a note from a trader who's been around for a while who said, the 22-year-old sitting next to me had no idea what you were talking about.
Exactly.
So maybe we come up with a different analogy.
Right.
I said just a minute ago, it's an Emily Latella moment now, because we got the ISM Services Index in there. There's another variance.
Yes.
She was the comedian.
The ISM raises to 51.
The services ISM comes in.
So that's a good number.
Everything is higher, including employment. And
so that's showing that the economy is strong
on Friday, and with the ISM
so
factory
with
orders.
so with economic data coming in for the ISM is strong, but not contractionary, the Federal Reserve most likely won't intervene with lower rates. And not just that, that's an impetus for algorithmic trading to come in and buy equities, because economic data is showing that the economy is relatively stable. So, like I said, there may be another signal that happens in October.
Put the data on Friday behind them, and everybody panicked, and now maybe they don't need to.
Also this morning, we were looking at the yield curve, as I'm sure you saw as well, Mike. It's turning positive for the first time since July 2022, if you're looking at the 2s, 10s part of that. So isn't that something also that you would potentially want to see as far as what that means for the direction of the economy after it was inverted for so long?
Well, yes and no. What people don't realize is that the yield curve disinverts right before recessions, because people are anticipating Fed action. And I think that's one of the reasons we saw a big move. It's been slowly flattening, but I think today it was basically the 2-year went way down. The 2-year yield went way down. People anticipating Fed would be cutting rates and maybe an emergency rate cut and things like that. And right after this ISM number came out, it went back to where it was yesterday. So we're either slightly positive or back to slightly disinverted. So I'm not sure that's a signal, but there are a lot of different signals you can point to these days, one way or the other. And I had an argument with another strategist this morning over the Bloomberg, who was suggesting the Fed needs to act now. And I thought, don't you think it'd probably be good for them to wait a few days and get a little more data and see if this is just a panic or a real collapse? And I think the waiting part is what the Fed is going to endorse.
It just remind us, how rare is it for the Fed to do an emergency, like intra-meeting kind of rate cut or
It's very rare, and they only do it when the market stops functioning. And that's what we saw.
They're not gonna
during
cut
in
today
March of
because the
2020.
market's
That's what we
working.
saw in the fall of 2008 when Lehman Brothers went out of business, and we saw the market seize up there. But there doesn't seem to be any indication that you can't trade today. So as long as you can trade, that's what the Fed is concerned about. If you lose money, that's your problem, not theirs.
Well, you also spoke to Austin Goolsbee on Friday. He spoke again this morning, but kind of unpack for us what he and his reaction to the jobs report, because it seems like, again, they follow trends, and that was just one report.
Well, it was interesting because Goolsbee has been one of the more dovish members of the Fed, suggesting that they needed to start the process of normalizing rates, and yet he wouldn't really go there on Friday. He didn't want to front run what they might do. He said, you know, we're okay with where we are. Let's see what happens in the rest of the data. And he had a vote this time, filling in for the vacant Cleveland seat. And he did not dissent. He voted for the Fed to hold rates where they were. So if one of the biggest doves was okay with it, then probably the rest of the Fed is going to be feeling okay with it for the moment.
Right. All right. Very good. Michael McKee, thank you so much for joining us. Michael McKee covers all the economics for Bloomberg, and we appreciate getting some of his thoughts here. The S&P 500, we are off, let's call it 3%, 159 points. The NASDAQ, that's off 3.7% here today, 627 points, down to 16,150 yields. Lower, not nearly as low as they were before, but they're about 3 basis points low on a 10-year, 3.76 on your 10-year Treasury. WTI.
Now, people are going to get stressed out because of the way the market is, and they may not be, you know, as calm as they should be. Don't worry, everything's okay. But if you're having problems sleeping, please go to my store, the-studio-reykjavik.com, and get the Good Night Formula. Good Night Formula helps you to get into 3 cycles of REM sleep, get a deeper sleep. You're going to be well rested when you wake up in the morning. It has tryptophan and melatonin in it. And this is important to have regular good sleep where you're getting those 3 cycles of REM sleep and you're getting that deep sleep. Why? Because deep sleep, REM cycle sleep, is going to allow for your body to detoxify. If you're chronically deprived on sleep, your body is building up toxins, your immune system will be down, your memory won't be as good, and you're going to have less energy. All right, and you're going to age faster. You look at people that don't get good sleep, they age quicker. People that do get good sleep regularly, they age slower, and their immune system is better. So please, if you're not getting good sleep, if you're concerned about work or the market or whatever, Fauci, whatever it is, please go to the store and get the Good Night Formula and take this so you get a good night's sleep. All right, it's very important. So go to the store and get the Good Night Formula. A lot of people don't realize that if you have chronic deprivation of sleep, that these toxins that start to build up in the neuron and in the CFS, cerebral spinal fluid, when these toxins start to build up and you're not filtering out because you're not getting good sleep, over decades of this problem, you're going to start having issues with your neurons because of the toxin buildup, and dementia or neurodegenerative diseases start to increase. So it's really important to find that way to get good sleep. All right. A lot of people, especially as they get older, they're not sleeping very well. So it's important to get a supplement that's natural, that helps you to sleep. All right. So please go to the store and get the Good Night Formula. Again, this has tryptophan and melatonin. Magnesium and zinc, really important for your immune system. We're getting into the cold season soon. And, people get stressed, they're not sleeping, whatever, their immune system is down. You need to take magnesium and zinc to boost up that immune system. So please go to the store and get the magnesium and zinc. And if you're not feeling well because of the cold season, take a double dose of this to boost up that immune system. Omega-3, really important to help with cardiovascular health. What this does is it brings down LDL, it helps to increase HDL, and omega-3 is known to prevent the red blood cells from sticking. So it helps to reduce clotting, right? So please go to the store, take the omega-3, it's really important. And I'll do another show on PFAS, forever chemical type stuff, and how to try to detox these forever chemicals that are in our environment. It's very important. I'm going to do a documentary, or a critique of a documentary that I saw, and tell you how to mitigate forever chemicals and how to get rid of them out of your body. You can't get rid of them completely, but there are ways to mitigate it. All right. All you got to do is just pay attention and just follow my lead, because this is what I do every day. Multivitamin is really important. So please go to my store. I have a multivitamin that's easy to digest. It's a high quality multivitamin. All right. It's important to take a multivitamin because you need cofactors for proper cellular processes. You have enzymes in your cell that need cofactors. Those cofactors are vitamins and minerals, and they attach to the enzyme and helps for the enzyme to be active or more efficient. So if you're deprived on certain vitamins, you may have lower par activity for your cells. So it's really important to take a good multivitamin. This one is easy to digest. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video.
Trina's pricing in China, it's not just regulatory issues. They don't have an AI offering in China, and they will not unless they properly partner. So it's not just a regulatory issue they have to navigate. It's a whole AI offering that they have to figure out.
They may never have a true Apple intelligence in China, so they may run into the same issues that Meta and Google have run into in China. So I do think the market's still ahead of itself. If I'm projecting 50%, I feel like the market's projecting a full 5G type upgrade cycle, and that may not happen.
At the same time, Tom, relative to other big cap tech stocks, particularly the Mag 7, is Apple, in your view, the most defensive? I mean, it may just be the cash cycle. It may just be, the services revenues. I don't know. That's way
From a balance sheet
standpoint, pull back.
Yeah, from a balance sheet standpoint, it clearly is the most defensive. So Apple has the ability, still generates $100 billion in free cash flow to continue to buy back shares, irregardless of what Warren's doing.
If it's so defensive, why is Buffett getting out? That doesn't make any sense. I would get out of Apple. I don't think I think short term.
So liquidation event, and as we were saying, just off air, it's really all about the Bank of Japan's governor, Ueda, who came out. They surprised markets with a 15-bit hike. But then, of course, on top of that, he talked about the idea that neutral rates are a long way away. So in other words, it's a rate hiking cycle. And he's done that into, it's very interesting. So the Fed's talked about cutting, and we got a bit of that from Powell last week, a bit firmer. And the BOJ's raising, and they've done that into two extreme positionings in markets. Everyone was short the yen, and everyone was max long the Mag 7. And both those rate those rate cycles changing influence that position. So it's like we're in a giant repositioning in global markets and a giant liquidity event on the back of it. So there's a lot going on. It's pretty interesting. Not to mention the macro data, which we haven't even got to.
Right. Well, looking at the Mag 7 index here in the terminal, down almost 5% today, so on pace for its worst day, actually since July 24th here. So keeping a close eye on that. But also, you moved neutral to U.S. equities in late July. Actually, it was ahead of the Federal Reserve's decision last Wednesday. Kind of unpack us how you're advising clients to position. Where are you telling them to put their money? And like, what would you want to buy? What would you want to sell at this point?
Well, I think it depends on obviously your time frame. So if you're sort of next couple of months, I'd just be cautious. I think markets haven't finished their sell-off today. We're we're in the midst of it, and there's more to come. And generally, when markets sell off this sharply, the price action dictates you get a retest.
500 SPY
in terms
support
of,
level.
intermediate cut or very dramatic strong signaling. So short term, I do that. In the medium term, I think one wants to see this as an opportunity to start moving portfolios around in terms of that global sector rotation. So our view is that markets have fashions. Every 6 or 7 years, the global sector leaderships change. And it's been tech, it's been strong. And we think it's now starting to change. We're coming into a rate cutting cycle. I think we're going to get cyclical re-acceleration in the West. And, we think people should start positioning for that. That's small and mid caps in the US. That's overseas equities, non-US equities. So I think the headline is we're going back to the noughties in terms of what does well. It's like Back to the Future all over again. But what goes around comes around. And I think we're going to get a consumer and housing boom over the next 1 to 4 years across the Western world. And that's going to change the equity sector leadership in the global stock market.
Looking at the VIX here, it's up about 19 points to just north of 42. It was up to a level of 65 earlier this morning, just blowing out like crazy. Does that tell you that panic is out there earlier today?
Well, there's definitely panic, isn't there? 60 is a big, I remember when I started this business, it went over 20 before it was a big number. And then, of course, that's all changed. But 60 is undoubtedly a big number, very, very rarely to get above that. So I think that very short term, what people want to watch is, do you get a bullish key day reversal in markets today? Obviously, they've opened below the lows. Do they close above levels that they saw on Friday? It seems a long stretch from here, but still a few more hours of trading. This market is very volatile. It can move along very quickly. But look, most sell-offs happen in 3 or 5 waves. So we've had wave 1. We're going to get a relief rally. If you're a trader, at some stage over the course of this week, you want to get involved in that on the long side.
When you're talking to your clients, what are some of their top questions right now?
Well, I haven't talked to many today because I think the questions might have changed over the last 12, 18 hours. But no, we've been the big question has really been, when do you get out of the Mag 7? And I think that's becoming increasingly obvious. And of course, I think the really big question will be now, has the psychology really broken in that sector? Is this genuinely the top on a relative basis for them?
BioNTech loss is wider than expected because of their back sales.
There are tons of questions. People are going to be asking about this liquidity out of Japan. They're going to be asking about neutral rates in Japan. What does you even mean? And we're going to be looking for Fed and other central bankers to accelerate their rate cutting talk, I think.
I'm glad you brought up July 11th, the CPI day, when we got that last report for the month of June, because if you look at the flows data, a lot of that rotation, of course, people were talking so much about small caps last month, but now they're coming under pressure. But those kind of income-driven type proxy bond-like sectors, if you're thinking about utilities, real estate, a lot of flows going into that. Even last week, if you counted both of those sectors with Bloomberg intelligence data, it was close to about $1 billion going into those 2 sectors. And then if you looked at technology, there was a little bit of a bid for the buy. The dip, there's around 300 million that went in that sector. But when you're thinking about the bond proxy type cores of the market, are we still clearly seeing rotation? It's just rotations now continuing to move if you're pulling up those expectations for when rate cuts could potentially happen.
Yeah, markets sell off, you go defensive, you go bond proxies. That's what you do. That's where you go and hide. So, generally, I always think of the market as cyclical as defensive as a long duration growth. And, there's an argument you go defensive before you go into the cyclicals. But, it's no wonder we're seeing that. And I think that 300 million into tech is they're probably regretting every penny of that right now. Look, I travel around the world talking to investors. Over the last 6 months, every single man and his dog has owned NVIDIA. And now every single man and his dog is probably selling it, if they haven't already. So
it's the buying opportunity then?
Well,
for a stock like that.
I think we're seeing.
Look at tech in 2000 when it had its major TMT peak.
I think what we're seeing is an over investment in chips and the whole AI trend. Where's the proof that it makes the society more efficient, right? Compared to the run up in the multiple in the stock. It's not there. It's not justifiable, so it has to go down. It's like the tech bubble. Too much invested in AI.
To be a leader.
Well, that's absolutely right in the US. But
Yeah,
outside
and to
the
prove
US,
my
not.
point,
So globally, the market can be
the
led by other stuff, but you're right.
NASDAQ is, for tech, for the ones that don't know, that's selling at over 4% down, while the S&P 500 is selling of 3.3% down. Tech is driving this issue. And banks.
So it changes the trading dynamics, the valuation.
Exactly. The sectors are very different. We have ASML, but that's about it, really.
I like SAP too. I like SAP.
Yes, but we like a couple, but it's pretty thin.
Exactly. You have the European companies have that exposure to China to a greater extent.
They do.
Yeah,
they do. We love Spanish mid caps, just to go really
Spanish mid-caps.
Really
mid-caps, okay.
No one's talked about Spain for 15 years. But so the pigs are coming back.
Okay.
The pigs are back. You remember the pigs in the noughties? Yeah, they're coming back.
All right.
What goes around comes around.
Very good. Chris Walling, actually, we're going to keep you for a little bit. So, all right. So, as you travel around here, are you talking about European equities more than U.S. equities to folks?
This year, we've started talking about European equities and UK as well. UK, I mean,
What
I
is
don't know how much
interesting
you've seen
here-
about riots over the weekend, so maybe people are a little off.
What is
the UK at the
interesting
moment.
here is the Russell
but actually-
2000 index, which is a more broader index than the S&P 500, is selling off at 4.4%. So that's going to be, you got your large cap, your mid cap, your small cap. So that's an indication of a broader sell-off.
UK, even some of the emerging markets, but not in this liquidation event. This is when you pick them up on weekdays in this liquidation event. If you're 1, 2, 3, 4 year investor, it's going to be really interesting for you. It's going to be very different from the last 5 to 15, really.
So, when you tell people that woke up to this market and see this kind of volatility here, what are you telling those folks? That this is maybe perhaps part of a reasonable correction, or is there something else going on?
Well, to be honest, it depends on their time frame and whether they're a trader or an investor. But I think the really important thing here is this, just look at the yen. The yen tells you everything. The short positioning, it's the carry trade currency. Everyone's been funding short yen, long, Brazilian or Mexican currencies, or long Mag 7 or whatever it is. You fund out of the yen. So you're getting killed at the moment. So this is very much a liquidity event, short term. It'll burn through. Hopefully the central banks will turn up. Then you start picking out what you want for the next 12, 18 months. And that is when we think about this move into cyclicals and move overseas or into mid and small caps.
So what's the next big sort of event that you're keeping your eyes on? Because obviously we have Jackson Hole, it's not till later this month, but we'll have a ton of different Fed speakers coming out, and then still a lot of consumer-related earnings in the US this week.
There's a ton of stuff going on, isn't there? Even though it's August, there's no going on holiday. Luckily, I've been, so I don't have to worry about it. But I think, are we going to get into meeting cut? I think that really depends on how much financial conditions tighten and the price action in markets. What is the market pricing in? Are we going to potentially get 50? Is the market it's probably priced at 50 for the next meeting already? I don't know. I'm out of date. I'm using the screen for 20 minutes. But yeah, I think all of that is critical. The data is critical. ISM services today was very interesting for the soft landing on it.
Came in better than expected. Hey, Chris, thanks for joining us here. Chris Watling, he's the CEO, Chief Market Strategist for Longview Economics, based in London, but he's doing his U.S. tour.
I think it's structural for tech. So, I'd be careful if you're just investing in tech. And for the ones that have been paying attention to me, I'm a macro trader. So I look at commodities. I trade a lot of oil. So I'm that kind of guy. And I look at indexes. I don't trade individual stocks. There's too much idiosyncratic risk for that. But I think that the tech sector, chips and companies that are tied to AI and that whole AI wave, I think the inflation, the exuberant bubble for that, I think is starting to pop. So I'd be careful with investing too much into that sector or individual stocks that are tied to the AI trade. I just think that it's just better to just trade macro. But that's me, I just, I just think that it's better to manage risk by doing that. But, there's thousands of ways to trade. There's thousands of ways to invest, right? And I'm just saying that there's some movements here. There's some global movements that are happening. But the S&P 500 is stabilizing. It's just under 3% down now. The algorithmic trading is coming in to backstop the market, to put buys in. So I think it's stable. European market's stable, but that doesn't mean that it stays stable, But this may have been the warning sign of something larger happening in October. But again, the resistance points are really important to understand for the S&P 500. Even though that we, spiked at 64 today, pre-market for VIX, 500 for SPY is a major support level. 482, 483, major support level. 457, major support level. 430, major support level. All right. And if you have cash on hand, you pick one of those trigger points to deploy more cash. All right. The best way to do it is you take a certain percentage of what you have in cash, and then you go, okay, if it hits 500, then you deploy a certain amount. If it hits, 483, put in another amount. Right. Another strategy is you just pick one and just say you're going to deploy it all. Let's say if it hits 483, then you're going to deploy all your cash. I still, again, am targeting a 5,800 on the S&P 500, or for SPY, which is the ETF, that would be 580. All right. The chances of it getting to 600 for SPY or 6,000 for the S&P 500 is lower probability now. But it could happen. It's just that we need a little bit more understanding of what's going on in the economy. The economy seems to be still robust. What the Federal Reserve is going to do, if it lowers rates, the stock market's going to skyrocket. So, and if they lower rates in October, or before October, the probability of it hitting 600 for SPY is increased. So there needs to be a few more data points to come in, but I'm still targeting 580 for the SPY, and that the support levels are 500 and 483. So I'm not worried. I was waiting for it to perhaps trigger the 500 mark for SPY. It didn't trigger it, and therefore I just wait. Just be patient. Don't worry. Don't worry. Everything will be fine in the long term. Now, if you're doing day-to-day trading, you're maybe even shorting the market, but there's different ways to deal with this. But as of right now, I'm not concerned too much. But we need to understand if the Asian market tonight will have a sell-off as much as it had before. Most likely it won't. I think the backstopping happened in the New York session, and that will be a feedback loop, a feedback to Asia to not have as much of a sell-off. Will there be a sell-off? Might be, but it's not going to be 12%. It's not going to be 6%. It may be 3%, or it may be even positive because they see that it's an opportunity to buy. But if it doesn't, and there's an additional level of selling off this week in Asia, that may cause a contagion for the European market and the US market. So we just have to wait and see. Okay. So I will keep you up to date on these sorts of things and how I see it. We have to be data dependent and just be calm. Don't worry. Don't worry.
Industry groups they are lower, led lower by technology and the cyclical areas of the market. They're doing better right now. Apple also sinking, sell off, second only to NVIDIA in terms of market cap destruction. The round coming in the wake of Berkshire Hathaway gutting its Apple stake. We're going to have more on that in just a moment. On this particularly high volume day, users reporting issues with multiple trading platforms. This includes Fidelity, TD Ameritrade, Vanguard, and Charles Schwab. This according to Down Detector. The economic news that we got at the top of the hour. U.S. service industry activity improving in July. Dose of positive news as the market swoons. The ISM reports its non-manufacturing index rose to 51.4 last month, and that signals expansion, and that is the biggest part of the U.S. economy, worth noting. S&P 500, 164 points lower. That's down 3%, 51.81 on the index. Approaching correction.
That's a positive number.
8% for the high in July. And the Dow Jones Industrial Average down 1,069 points. That's down 2.7%. Tech heavy NASDAQ Composite Index right now 588 points lower. That is down 3.5%. 2-year yield is right now 387. So that's has stabilized somewhat. 10-year yield 2 basis points lower. That is at 376. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. Again, that's your Bloomberg Business Flash. Yes.
Please go to my store, the-studio-reykjavik.com. That's the-studio-reykjavik.com, and get the vitamin C supplement that I have. It also has magnesium in it. It helps with your skin. A lot of people don't realize that taking vitamin C and drinking filtered water is really important for your skin, but it also helps to boost up your immune system. If you're not feeling well because of the cold season, just take a double dose of vitamin C. Vitamin B complex, really important for cellular metabolism. People don't realize that the first 5 B vitamins are really important for your mitochondria. So please get the vitamin B complex. I have a lot of B vitamins in this, and it'll help to improve cellular processes, the cellular metabolism, and the mitochondrial health. It'll help to boost up the energy levels in your body. Clarity factor, really important to get rid of that brain fog. This is way better than anything that Alex Jones is selling. So please go to my store and get the clarity factor. This will help to keep those neurons firing and releasing those neurotransmitters. And what is great is it's synergistic with C60. All right. So this will help getting those neurons firing, and your memory is going to be better, and you can focus on work or school. It's really important to train your mind, read, learn new things, talk to people, stay away from negativity. All right. So you take this every day. All right. No matter, if you're in school, or if you're, an adult working, or even if you're retired, it's important to take this every day. Most people take it in the morning. Some people take it twice a day, but it's synergistic with C60. C60 is a very strong antioxidant. You take a teaspoon of it a day, and by taking a teaspoon of it a day, what's going to happen is it's going to soak up those free radicals, and that cell is going to have less cellular stress. So the cell will perform better. In addition, it will help to boost the health of the mitochondria. So you'll have more energy. So this is part of the reason why it's synergistic. So this helps get those neurons firing, and so you can concentrate, but improving the mitochondria in those neurons, the dendrites the dendritic connections will be better. Your memory will be better. You'll think faster. You'll have less neurodegeneration due to normal aging. So it's really important to stack this stuff. So C60 is a very strong antioxidant. Take a teaspoon of it a day, or a full dropper if you get the 2-ounce bottle. And I sell it in a 2-ounce, which is what I have in my hand, is a 2-ounce bottle, a 4-ounce, or an 8-ounce configuration. Right? I take a teaspoon of this every day. Okay, so that's really important. I sell it in extra virgin olive oil, which I have in my hand here. I also sell it in coconut oil, the MCT coconut oil, and I have it in the avocado oil. All right. So I have 3 different versions. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. Take a tablespoon of it a day, or a full dropper if you're getting the 2 ounce bottle. More, the full dropper is less than did I say tablespoon? I meant teaspoon. Take a teaspoon of it a day. But if you get the 2 ounce, take the full dropper, but a full dropper is less than a teaspoon. So I take a teaspoon every day, and that compound effect is going to soak up all those free radicals. Take it on an empty stomach for better absorption. And if you work out regularly, take it before your workout. Why? Because you will recover quicker. When you work out, you're creating free radicals, right? And you want to soak those up as they're being created. And that will help for your recovery. So if you want to slow down the aging process and improve your memory and improve, a lot of the cellular processes, especially mitochondrial health, take the C60. You'll be amazed. You'll be amazed. It's important to take every day. Take a teaspoon a day. Again, you can get it in extra virgin olive oil, coconut oil, or avocado oil. Why is it in oil? The C60 is soluble in a lipid and not in water. It's not water soluble, it's lipid soluble. That's why it needs to be in an oil. Lignans, very important for your immune system. It's for males and females. Since we've gone through the 2020 crisis and we're in the aftershock, people's immune systems are trashed. People need to boost up their immune system. So it's very important to take lignans every day. It's a powder, you mix it with your food. And it will also help with your hormonal health for males and females. A lot of people don't realize that the forever chemicals, these PFAS chemicals, they affect your endocrine system. You need to take supplements that mitigate that problem. So, and PFAS, forever chemicals, also affect your immune system. So you need to take supplements that help boost up your immune system and help to stop the endocrine disruption from PFAS. So take my lead, boost up your immune system, improve your endocrine system, your endocrine health. Go to my store, the-studio-reykjavik.com, and get the lignans. Resveratrol, really important as an antioxidant, and it helps to get rid of senescent cells, and it is synergistic with C60 because you're reducing stress in the cell, you're helping with mitochondrial health. Resveratrol is getting rid of senescent cells. It's an antioxidant. It's helping the cellular health. There's the synergistic aspect to it that help to slow down the aging process to increase the longevity. So please go to my store and get the resveratrol. It's all about the stacking. You get more efficacy from things like NMN or NAD plus or resveratrol when you stack it with other things, such as C60. So please go to my store and get the resveratrol. It's part of my anti-aging protocol. I take it every day.
We were talking about some of the reportages of outages for the volatility, like Schwab and Fidelity. Some people are keeping a close eye on some Schwab right now. Other retail brokerages, users reporting outages as obviously this global stock sell-off still continuing here. So we're going to keep you posted. More than 14,000 users reported outage at Schwab.
AMSOIL runs on freedom and has since 1972. The rest of the market.
While we're waiting for that announcement to end here, please go to my store. I've been partnering up with Rainbow Herbals, and we've created these great deodorant bars. I think this is our 3rd year with the deodorant bars and the skin utility bar. So this one is peppermint, lavender, and tea tree. This has no aluminum. It has no baking soda, and it's made from all essential oils. We also created another version of it, which is citrus. Same thing, no aluminum, no baking soda, made from essential oils from the Himalayas. These are very high quality deodorants. Use it every day. But the beauty of this is that it helps to detoxify your body too. So it's a dual purpose. In addition, it's for males and females. So get a couple bars for your household and you'll be amazed at the high quality that this is. It's way better than anything you're going to be buying from Procter & Gamble or Unilever. So please go to my store and get these very high quality deodorants. In addition, we have created a multi-purpose skincare bar called the Even Better Bar. This is also made from essential oils from the Himalayas, all natural. And this will help your skin. You put it on your skin. You can do it every day. Some people do it every third day. Put it on your skin, you'll notice your skin will be smoother and there will be a little bit more of a glow and it's softer. In addition, you can put it on a cut, an abrasion, or a minor burn and it'll help to heal it faster. It will reduce the itching from a bug bite, such as a mosquito. If you pull a muscle and you have that muscle pain, you can rub it on the muscle and mitigate the pain, if not completely eliminate the pain. It does that in 30 to 60 seconds. All right. In addition, it has these multiple functions. It can help to alleviate psoriasis and eczema. So you apply it on that lesion, and you'll notice that it's relieving it. So please go to my store, the-studio-reykjavik.com, and get the Even Better Bar. This is a multi-purpose bar, skincare bar, and you'd be amazed at the benefits of this. Just get this for your medicine cabinet, because if you have kids and they get a mosquito bite, just put it on the mosquito bite and then the itching goes away, and it'll actually heal the entry wound. Kids have a tendency to fall and scrape their legs and arms and stuff. Apply it on that and you'll notice they'll heal quicker. When we get older or we're working out, we may pull a muscle, apply it on the sore muscle, and it will reduce the pain, if not completely eliminate the pain in a very short amount of time. And as we get older, we have to up our game with skincare. So it's important to use this as a skincare product. So it's a dual purpose product. It's very high quality. Get a couple bars for your household. It's the-studio-reykjavik.com, and this is the Even Better Bar. So please go to the store. The link is in the description of this video. It's the-studio-reykjavik.com. Now, people would say, Paul, why are you pushing so many products when you do your video? I have a lot of products, and it's really important for people to realize that if you stack this, if you use these products, not just one, but if you use them regularly and you use them together, you're going to notice that you're going to slow down the aging process and your longevity. You're going to increase your longevity. You're going to increase your vitality. You're going to increase your immune system. You're going to just age better. Not only are you going to age slower, you're going to age better and you're going to have more vitality. It's about diet. And some of the things that I tell you are freebies. Diet and exercise, proper diet and exercise. You need to stretch. You need to sleep. You need to train your mind. You need to filter your water. And you need to do proper supplementation. When you do these things, you're mitigating some of the aging that is happening in your body, or the chronic inflammation that's happening in your body. See, a lot of people don't understand. It's not about just taking one thing or doing one thing. Oh, they only do stretching. That's not going to do anything. It'll make you more flexible, but it's not. That's about it. It's not going to. But if you add in some muscle, some cardio, and some muscle training, resistance training, and you do stretching, that does wonders. They're synergistic. Same thing. If you just calorie restrict, you're not going to get the full benefits of doing calorie restriction and filtering your water. If you just filter your water, but you eat lots of processed foods, you're not get the same benefit. It's about synergy. It's about stacking. That's why, and it's so important to people to realize that the lifestyle change and stacking of the supplements is going to make this work. Lots of knowledge has been gained over the decades with people that have been doing these sorts of things with proper exercise and proper supplementation, proper diet. So I'm just trying to inform the public. So, and by you buying from my store these high quality items, you're going to improve your health and help support my work. So please go to the store, the-studio-reykjavik.com.
They were the most direct beneficiaries of the generative AI wave. They still are, but valuations clearly were stretched, and that's why, with macro playing the role it has, with interest rates and other stuff, I think was a big risk, and that's what we're realizing for the last 2-3 days. And to answer your question, whether this is a buying opportunity or not depends on what sort of estimate revisions we see with the companies. And NVIDIA still hasn't reported. I think the risk for them is because they have that triple-digit growth, where do we go from here? Do we keep growing, north of 20-30%, or will the growth rate drop to single digit, which has happened before with tech companies? You have seen that with Tesla. We have seen that with likes of Zoom. And what you want to avoid as an NVIDIA is that repeat of the sharp tapering. And I think we'll find that answer later in the month.
All right, there's also this news out there, I think it's important, that there's a report out that their upcoming artificial intelligence chips will be delayed due to design flaws. That's not good.
That's not good, given the risk that I just talked about. So, if there's one thing you want to avoid as a hardware company, it's the same risk that Apple has. It releases a new phone, there are some glitches in the phone, the whole sentiment changes. And I think NVIDIA is at that risk where even slightest of delays with the newest version of this chip, it's going to cause a panic. So that's part of the reason why you see NVIDIA dropping more than the other Max 7 names today.
Of course, as you know, NVIDIA's next report isn't until August 28th, but I know a lot of people were looking to, when it comes to its customers and how they were spending ahead of that report, whether you're thinking about Alphabet, Amazon, Meta, or Microsoft. What did we glean from those reports and what that could tell us ahead of NVIDIA reporting?
All the data points were positive in the sense that every hyperscaler talked about raising their CapEx guide for second half and for 2025. And no one even remotely mentioned that they are looking to get off from NVIDIA and, develop their own chips and scale it up. So clearly, everything we heard from the earnings so far has been positive for NVIDIA. But still, that doesn't change the fact that we are dealing with the law of large numbers when it comes to NVIDIA's data center revenue, $100 billion run rate this year. I mean, they just can't keep growing triple digit. And that's where the pace of that decline comes into play.
Talking to your clients over the last few days, you get a sense that they are buying the weakness, or are they just kind of maybe take some chips off the table?
I mean, the sentiment still is that generative AI is a secular trend. It's real. You see that in the revenue that Microsoft is generating with AI workloads, with their co-pilots, and this will continue to ramp up. The question is at whose expense it is coming. We saw that with Intel last week, that clearly it's hurting their legacy CPU spend. So when you see trends like that, where a few companies are doing exceptionally well, the other ones not so much, that's where you have to take a pause and see, is it going to have an effect on the overall sentiment? And I think we'll find out if this downdraft will have an effect on the overall consumer spending.
I will see August 28th.
Well, that's my coverage of the market. Don't worry, there was a sell-off. Things are stable. Looks like individuals are backstopping the market by coming in and buying. That doesn't mean that it's going to be not volatile throughout the week. I suspect that it will be volatile, but remember the support levels that I said for the SPY or the S&P 500, and manage your risk accordingly. Please go to my store, the-studio-reykjavik.com. Please subscribe to all my channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. If you'd like to help support my work, please be a paid member to my Patreon channel. Link is in the description of this video. Or you can donate on my website, the-studio-reykjavik.com through Stripe, PayPal, or buy me a coffee. By you sharing the links, by you asking your social media to follow me, you are going to benefit from my insights on health, my insights on economics and finance, and my insights on other topics of current events. So I think it behooves you to share my work and to ask people to follow me. The more people that I can reach, the better individuals can learn about how to improve their health. So please go to my store, the-studio-reykjavik.com. The link is in the description. Thank you for listening and have a nice day.